Let's talk on the assignment. What happened?
So I'm struggling with when they take something out of the assets, like with this, they took out machinery to utilize for building the other building, and then another part was take away because of how, and then there's when my brain get confused and everything runs away and I run away because I don't understand that part. That was my whole
Don't worry, you'll see with the
problem
class.
about that. And then
Don't
the other
worry.
part I also struggling with, if you look at the question, they say the plant and machinery was a carrying amount. And then you have to calculate the cost. And I also struggled with that one. So that is, I think, where I lost a few of my time.
Don't worry, the first of your struggle is not your struggle. Even better if you do that last in an exam. You'll see how I'm planning to teach you how to do the exam. What you guys do is you filter the easy mark towards the end of the time, and that's not the way you need to do an exam. You need to get all the easy mark first, all of them. That's what I meant when they will push you. Okay, let's meet the others. This is what will push you to 67. When you get to the second worry that you're having, getting the carrying amount is not that difficult stuff. You are expected to do that. Then I'll teach you to handle when you're going to be slightly under pressure with that. That is not the so easy marks. Then towards the end, you have to do the not so easy things last. So if you get them, it's all right, meaning you're one of those that scored the 98% under the 42 minutes. So let's get that one. I think I thought it was Isabel that had 93 in the class. No, Isabel, there are people that are sitting at 98. But when you check how long it took them to do the assignment, it's number of days. So that it's not worth it. So forget about the assignment. It's out now. You guys did not do it in 40. If you're doing anything above 42 minutes in that last exercise, you're doing very bad. So you need to get your 80, 90 at 42 minutes. But remember when we started with the class, I said you guys need to get into an exam, prepare properly, because actually this exercise you didn't have a 42 hours. You needed to work from the skeleton that you prepared on the class. Remember that 5 minutes, because it was an exam. It's just like I did not give the question at the same time. So you need to prepare things nicely there. So you can't just write for the sake of writing in my class. You need that work because we've got 5 minutes we spent. You get into the mode of the question, but that 5 minutes needed to have been lost. I'm still gonna be on the PPE. See if it's the one as I'm finishing it off that we started last week. I'll bring the investment property indirect because you have seen it in the question. And then once we do that today, that's fine. We'll see what we do with the leases. I like the person, I think, who struggled with the calculators. Guys, get the manuals. They're easy marks not to lose with the leases in terms of how your financial calculator is working. Learning 5, I wanted to do the continuation on the PPE where we left off. I know I was flying in that class, but for the fact that you had an assignment and you guys attempted it, that's a bit of almost everything that was on a PPE. Some covered, some have been covered. That's all right. Now, when we're dealing with the revaluation model, so the revaluation model, it will look similarly to what the investment property it does. When you see that land, what they did is at year end, you got a valuator that came in to say, hang on, but this land is not 800K, but instead 850. That's the purpose of that. So just need to read carefully in a question to say, if I'm dealing with revaluation model or it's a fair value adjustment when I'm dealing with investment property, how do I treat the two? All right, so it's more or less the same concept, revaluing, meaning you're just upping up your asset in a sense that it could go up or it could go down when you're devaluing that. If the revaluation is on an increase, we need to check that what the IS 1639 does is say no, for all the non-depreciating asset, you will do it on a revaluation model. Where do I take this excess amount? In this case, that similar amount will be that 50 extra K for those that have attempted that land and building. If we're doing a revaluation model, it will go to OCI. Then that's more like a revaluation gain. OCI, we did say it's other comprehensive income. Remember when we started with the elements of financial position, we had the OCI. Where it will do, we'll also deal with it when we deal with the statement of changes in equity. You'll have that same account that you're attending your revaluation surplus. If the revaluation is on a decrease, it could happen now with a lot of things that are happening. A lot of things could be affected by devaluation. So if it's on the downstream, it asks us how to deal with that. It says you will decrease your revaluation using that OCI. Remember, if in the first year that amount went to 850, so in my OCI, I'll be having 50,000 extra. But if the next year it's no longer 850, but 820, how do you guys think I'll deal with that extra 30,000 decrease?
Through OCI as well.
Through OCI, you're right. In that case, you're having that decrease because the land will be going down and then it will go on a credit side, isn't it? Then your OCI will be debited because you're reducing that 50 now further down with that amount. So that will have been the decrease. I think I saw the chat asking, are we dealing with that question? Yes, it was that question. That's how we will deal with the decrease. Then the reminder, if it will be in excess of that, it will go to P&L. So that is more of a detail when you're on the theory, but we'll touch more of that. If it comes in a question, you need to say, because what it basically says here, if now the decrease went to 700, because it was 850, now it's going to 790. This is that part that says you'll go up to 50,000. The excess 10,000 will be accounted under the profit and loss, because with that land, specifically the one that you did in your assignment or in the class exercise we had, it went up to 50,000. Now we're saying, should the next year the land be valued at 790? It means now you need to reduce it from 850 to 790. That is a 60,000 decrease. But you can account the reversal in the OCI up until 50,000 because you only have 50,000 in the OCI. Therefore, the remaining 10,000 will need to be accounted as a loss in the profit and loss account. Do you guys get that? That is what it means. It could get rougher like that. And then the next year, if it moves from 790, maybe now it goes to 880, you do the same things like about reversal N. That is how far I wanted to go. Let's get the recap. What was there? See if it's the one I had on you. That's an assignment we had. I think I tried to answer to majority of the people that submitted on time to check where they went wrong and where they went right and what needed to be done. But majority of you guys, could be one or two people that, actually one maybe, that went overtime. Majority went overtime. There's one person that tried to do it on time. One or two, try to discipline yourself. When the time is up, let it go. Any marks that you're earning after that time is up, it's not counting really. It's actually putting you under so unnecessary pressure. Okay, we need a pen and calculator, 30 minutes. Your mind should write. So what you do, the calculator is up. So if you've got a question that is a 30-minute question marker, what do you need to do?
30 times 1.2 minutes.
How much is it?
36 minutes.
So you've got that 36 minutes, and then what do?
You read the required.
No, you don't do that. Another one?
You draw the outline of your framework.
No, Zakes?
You read the question first.
You can't. You're stuck here. There's nothing else you can see. Valencia?
You set timer.
You set timer, you look at time. Thank you very much. That is what you guys did not do. You check exactly what time is it. Remember, you won't be very lucky. They might delay you. That's when they used to write it an exam. You have this lady talking and maybe there are a few delays. The exam does not start at 9 o'clock exactly. It's now 9 or 9 minutes, some funny minutes. So you need to calculate your 36 minutes that is properly done. So you need your 36 minutes added to 9:20, make it 17:26. Can you see now how the maths become difficult? So on that, if I'm looking at 17:25, I need to top it with 36 minutes that I need. Meaning at 18:02, I needed to have stopped this question if I was writing. So you guys, all that you do, you want to rush, you don't do this planning. So this is the planning you really need. You cannot do anything. You're not doing that. Can you see that? You can't prepare the structure. It's a structure of what? I haven't given you the question. What structure are you preparing? That time that you come down, you read the marker or exactly what do they want. How is my memo going to look like? So you're working around yourself. I'm timing myself. That you definitely gonna need. It's only when, because I'm doing the presentation, you can see what is required. And then you can tell me about the structure. You are correct. Can you see the difference? That's all right. There it is. Then you write the structure you need it. Let's get to that structure now. How does it look like? Can you see now? It's kind of a lengthy question for a 30 mark. So you need to be very kind to yourself. Let's say, okay, if it's 30 marks, it's most likely I might need 2 pages to do my journals. Then your third page, it's gonna be about calculation and all that. So that is always that what you're having in mind. I'm trying to send, it might delay me, the question into the group because we don't reading the same as that. We'll tell you the time to start. So how long would it take you to prepare the structure for the journal? 2 minutes. I can gamble with 2 minutes. The others, how far did you guys do the structure then? Because we were on 17, 27, 28. 2 minutes sounds reasonable. Homotso and Palisa, please share the structure that you've prepared there. Let's get into that. The others, how long it would have taken you to do the journal? All that you need to do is just journals, debit and credit. Then there's nothing else. Then you're gonna have the ruler that you're gonna use that entire page for it. So 2 minutes might be too much. Others, what's your take?
30 seconds.
30 second tops. Should we target 30 seconds, guys? And you write it neat, Ellington, and then you have your ruler just to divide those 2 lines. So it's 30 seconds, nothing more.
Yeah.
Should we go with 30 seconds? Great. So it all matters how long it takes us. It's all equally important. One more time. Let's get to the question. So the structure is ready. So meaning you're not gonna go back to the required. You know what is required. It's just debit and credit. So there's no need to ever going there. Thank you, FAC2601 for that. So we sorted. Let's just get that camera off. I'm trying to open the question. Just hold on with me a little bit. I will also try to share in the group. Don't worry if you're not added, because I think ideally I wanted to stop the adding. It's just too many admin guys. I've got a lot of other things that I do at some point. We'll try to add it one more time, but here we'll show it on the slide. I think the last comment I saw coming, including proper ruling. I like that word, including proper ruling. Yes, Lehodi, we need that proper ruling. You guys were sending the assignment not properly ruling. So let's properly ruling. So that's good. So it's 30 second max. Going down even better if you do it in that less than time. Highly appreciated. 2 minutes, it's too much time. There's gonna be a lot of calculation to do. So we can't afford to do that. That's that part under the please note. Don't miss it. When it's like this, that's all that they want to do. What majority of you guys did was not to you do the calculation and leave it there. But all of the Sunday now, there are lots of numbers in your note, which I don't even know where they're coming. So those that have submitted, I've asked them cross-reference. As you do the first calculation, make C1 so that you can take that amount you're getting from that C1 into wherever it's needed. In this case, it will be in a journal. We'll say maybe debit, PPE, and credit bank. You put C1 if you've done any calculation with it. It's clear so that when I go to your calculation page, you're very clear. So by the time you read, please note calculation. You take these other 10 seconds. you write calculation page, meaning on page 3 now, because those journals are going to be many. So it's going to be page 1 and 2 of journals. So you need to write nice, the way I showed you. Write, leave the space. So you do debit and credit because you're not doing calculation, so you don't leave a space. But when you go to do the second journal, you need to leave the space after the narration. But this question, what they did here, if they are quiet about do you include narratives or not, you'll be safe. You're not going to be penalized, so you don't waste time. So I left it for that purpose to say what happens. Do I write the narratives is when to say we went to purchase the property like we did with that cap issue. So in this case, if it's quiet, it depends how fast you are. But with the calculations that are going to come, you might not have that luxury to write narratives. We might not be too bad. Sometimes we might be very specific to say, do not put the narratives. Even better if you do put them. Yeah. I always want to do that. So what you'll have done in an exam, you'll only highlight the journal entries and 30 June. Someone tried to send me the paper that he highlighted almost everything. That is not how you highlight. You read the key things. I want to pick up the date. Always you'll highlight the date in accounting. And here in exactly what they want to make sure that you kind of aware that they need this journal. All right. Please note, you always read that one. I had it in a different pen. I think they make it bold or what. Sometimes it could be red just to kind of emphasize the point. Calculation must be shown. So you do it as, so you're not doing anything on your skeleton. So you're starting making your workings on the calculation. All right, so we'll start at exactly 1740. Let's get the question because I need to send you the question. There it is. That is what I will have done. That I've got 36 minutes. There it is. If you can start reading, you need to do the fast reading first. You're not understanding all this information that is put in the accounting records of COVID Ltd. 30 June 30 debit and credit. They've given me some balance. There's a land at cost, meaning it's got a note. I must do some reading there. There's a fair train office and building at cost. I did not given the amount. There's an machinery and equipment. I've given the note. It's 30 million. You don't know what it does that. There's motor vehicles. You don't do that. Then they give you the accumulated depreciation, meaning I'm going to be calculating a lot of here. There's a machinery and equipment. 30 June 2019. Note that date there. There's a motor vehicle 20 June 19. So basically these are opening balance, meaning last year's year-end balance in accumulated you are given. So remember, this is what you will have in your notes as your opening balances if you're doing that. We'll come back to that, and I'll share in the group the things in terms of that. So this is that fast reading that you need. So you cannot now try and sit and read slow as if you wanna. You don't go to that note as yet. You are scanning through. We call this scanning. You need to scan. So this additional information, I'm gonna open it. I'm not yet reading because I'm not attempting the question. So how UNISA and the other university I went to, it looks like it's all because I also attended the board course at UJ. They tend to trick you things. How you read accounting papers. I'm getting there. You don't read from 1, 2, 3, 4. You do not do that. If you want to see fire, you do that. This is where you start reading. Immediately after the required, you go backwards. What is happening at backwards? Meaning, I think this was ending at number 6. I think about 6 transaction. They provide you with the details that has to do with the accounting policies. But should you have gone and read from number 1, you are gonna be lost in the process because you don't know if this land and the building, how are they depreciated. So immediately from the required, you need to move and start reading number 6. So number 6, they're telling you that it is an owner-occupied land, is accounted. It's accounted for in accordance with the revaluation model. Revaluation model is the same thing that we've just dealt with now. And then the revaluations are made with sufficient regularity to ensure that the carrying amount does not differ materially from the fair value at year end. Okay, it's saying, oh, all right, whatever that means, you don't understand. I don't know how many times you want to read that. And then you go to number 5. Number 5, it tells you the story about the depreciation rates for all these assets that they've given you. So that information, they will plug it as the last items in the question. So you need to start reading from the bottom. Yes, Vanessa, let me take your hand quickly before I move to number 5. So this is an exam technique. So if you guys can start reading from above, don't be surprised when you don't finish. That's an advice. Remember, I've written so many accountings, including the board, so I know what I'm talking about. So that information gets hidden there. So don't get too excited and just jump into the question. From the required, you read from the bottom. So you go up, you just take those 2 additional bullets, then you can go, because you need to check what is the story about the accounting policy. Once you've got that, then when you come to number 5, and then I'll pack it from there. It says non-current assets are depreciated as follows. Now you're gonna need to have an highlighter. What I usually do, I will take maybe the yellow one. That is me, I don't know how you read. So my motor vehicle will be highlighted in yellow. It tells me that it's a 20%. Even better, they are telling me about the straight line method, meaning there's not gonna be complication or whatsoever. Once it's a straight line method, you must smile. There's no difficulty there. Then the next asset I'm doing, I think majority also have a green highlighter. I'm gonna have a factory and office building. It's at 2% per annum using straight line method. You're saying this exam is actually very easy. So the straight line method, you've got no reason to get it wrong. So all that they're saying is, if it's a percentage, you take the rent amount, you multiply by that percentage. In this case, for factory and office will be 2%. If there's no time apportionment, it's going to be times 12, so it's for the entire year. It will depend when it was acquired, so that's a little bit of background on that. Then there's going to be a problem. Anything that is red or pink, normally, those are the challenging. So I use the pink highlighter to deal with the things that I might not be even able to deal with in an exam because my time will be up. That's how slow was I. But anything else, I had to get it right. My yellow and green, I don't leave anything for chances. But when I'm starting getting with that, why I'm saying this in this case, because maybe reducing balance method is not one of my strongest points, maybe I'm struggling with it. So you cannot start by trying to solve things that you've been struggling with it all along. So you need rather get your straight line method very quickly, get all those marks for this number of assets. But eventually, if time allows, I will be able to see how I can. So hence, you need to correct your skill and just make sure you cover it. So my machinery and equipment will be 20% using a reducing balance method. How does that one work basically? It simply says, in the first year, it will work like a same straight line method. It's going to be the rent amount multiplied by 20% in this case. But now when I go to the second year, is that, let's say maybe for argument's sake, I've got 100,000. You multiply that by 20%. Maybe you bought it at the beginning of the year. At year end, you've got 100 times 20%. It gives me 20,000 depreciation. For the second year, you need to say, what is my cost is 100. You minus the previous year's depreciation in year 2, that was 20,000. So you're gonna have now 100. Okay, you can use calculators. Let's participate. It's not here. I'm trying to explain the concept. Minus 20,000. It gives me 80,000. So that is how the reducing balance method. So you reducing the cost itself. Never mind about the screen making listen, it's not even there. Don't worry, I know that it will be kicked out by network and the thing. So you've got 80,000. So you are reducing now this asset. It could be machinery or equipment. Its original cost by the previous year's depreciation, in this case, is going to be 100 minus 20, you get 8. And then it's only when you multiply by 20,000, you get 16,000. So can you see in the first year you had 20,000, in the second year you have 16,000. Can you see that my depreciation is keep going down? So in an exam, if my calculation keeps going down in terms of depreciation, then it means I'm doing very right. That is the only time you smile to reduce your pressure, to say, okay, these calculations make sense. Do you guys follow? Who is stuck? It could be mouthful, but just make sure. I think I must park there to take that question. Are you following, Tsepo? in terms of the example we are doing. It's a reducing balance method on how it works. Okay. Then let's do for year 3. Let me see what depreciation you guys will get in year 3. Shirley, you ready with number 3?
Yes, I'm ready, Mr. Method.
Please just read it slow for Cedric's sake as well.
Okay,
Now we're in
so,
year 3, Cedric here.
so in year 3, you will take the 80,000 and you multiply the 20%. Yeah, you multiply with the 20%, and that will give you 16,000, and you minus the 16,000 from the 80,000, that will leave you with 64,000.
In year 3. Or
In year 3.
Yeah. Because we already calculated the depreciation for year 1 is 20,000, and then the depreciation for year 2 is 16,000. So 100
Yes.
minus 20 minus 16 times
Park
20%.
there, park there. You see what he did at Cedric and Shirley. That is what you guys will need always to do that. Shirley, it's a high level to cut off the time. You might not be very incorrect, but you do it in full by definition. You need to go back to that 100 and keep minusing the previous year's depreciation. Thanks, Elton. Finish off there.
Yeah, then we get 12,800.
Good evening, class, and good evening, Mr. Mlefe. Mr. Mlefe, I just needed to check with what my colleague just said. Is it Elton? Does it score us any marks to have the 100 minus the 20 minus the 16? Or if I move from, because already I would have had the years as per how Shelley had made it, will I lose marks from that? Just checking.
That's a very good point. I wanted to bring everyone to that. Remember, by definition, I said the carrying amount is equal to last week cost minus accumulated depreciation. Anyone else who wants to assist Cedric? Where did you get lost, Cedric? Let's get into that one quickly.
Like, I'm not a fast learner, so if we can start from beginning, if it's okay with you.
That is all right. You can come at your pace, don't worry.
Yeah.
So we had an asset that was 100,000. It's depreciating at 20% using the diminishing balance method.
Yeah.
Are you writing down?
Yes, I'm writing down.
Yeah, let's start afresh. In year 1, the way you'll calculate it, you say in year 1. So you put YR1, it's 100K, multiplied by 20%.
Multiply by 20%, yes.
What do you get?
Okay, I'll check it now. This calculator is really...
You need to have 2 calculators, class. That's a good thing you complain about calculator. You need to have a financial calculator and additional machine. Because you'll never know. On a better things, rather have your calculator change the batteries. You don't want to have technical issues in an exam.
Yeah.
What do you get?
Multiply by 20%. 20,000.
So that 20,000 is your depreciation. Are you happy?
Yes, I'm happy.
Now we're going to year 2. So you're saying YR2, 100,000.
100,000.
That is your cost.
Mm.
You can write there. Then you minus year 1 depreciation.
Yeah.
How much is year 1 depreciation?
20,000.
Minus 20,000. How much do you get?
80,000.
80,000.
Yes.
Then you multiply that. That is your carrying amount. You multiply again with 20%.
Okay.
Push that calculator. It needs to, at least the calculator must
16,000.
16,000. You're happy now. That is year 2 depreciation. Can you see it moves from 20,000? It went down to 16,000.
Yes.
So what we're doing now is year 3.
Okay.
Year 3, you take 100,000 minus year 1 depreciation minus year 2 depreciation. You close the bracket, you get the amount.
Okay.
So it's 100 minus 20 minus 16.
Yes.
How much do you get?
100 minus 20 minus 16. 64,000.
64 is your carrying amount then. Then you multiply that by 20 again.
multiplied by 20. 64 multiplied by 20%.
Yeah.
12,000.
So can you see you
800.
moved from 20, you went to 60, now you're at 12.8.
Yes.
Then you must be smiling in an exam. So that 12,800 is your depreciation in year 3.
Okay.
That is where we're at.
Thank you, Mr. Molefe.
You're welcome. Any other hands? Any other shortcut, it's welcome, just to touch base on Peter's things. But once you make a mistake, Peter, you're on your own. You start scratching.
Principle.
So everyone is mastering reducing balance method. There's nothing difficult from it.
I wanted to ask, so if like they give us dates, for example, if like they say that we purchased or we bought on a certain date, so on the diminishing balance, can we say probably, let's say they gave us 3 months, so can we say like 3/12?
That is what you do. That's what you'll see in this class exercise you're going to do now. So the date will not always be at year end to year end. There will be that part where the asset is, say, maybe bought 3 months before year end. You're correct. You do that apportionment. So that was a part we didn't touch as yet. So we even further complicating it.
Okay,
when you bring that 3 out of 12, the dates, that's very important. That's the last part in the calculation of a depreciation that makes you guys sleep or drop the marks. Is that apportionment, the dates?
Yes, that one is a very big problem because
No, let's not make it big problem. We've killed everything now. So it's the only last problem. We're not dealing with big problems. Leave the big problems to the big people.
Oh, okay, no problem. Thank you.
Number one. So hence what I'm saying is once you need to highlight the dates, it's important because from the beginning of the year will be 1st July. So you need to be able to count from July up until the date they're doing the purchase. So they might even treat you to say they are purchasing at the beginning of the year, say in July, August, September, maybe in October. Might not be the same calculation if they are purchasing end of October of that year. So it could even get much more trickier. So that should be only things, but you need to show if you start from the 1st, you include the first, as you go ahead with that to calculate the months right. You get that now in a question. Guys, my apologies. My other laptop is very, very slow. I need to send the question. Any other question? So we're happy with the methods of depreciation now. Number one. So your nightmare I haven't yet covered is that depreciation capitalization. So once I get 100% in my question, then you are all fit to move to depreciation capitalization. That's like another some sort of a nightmare. I don't want to touch it because it's in an exam. In the class exercise, we'll see that. But you need to be able to say, if there's something that you see in fire, how do you react to that in an exam scenario? Because your state of mind needs to be consistent in an exam. Because once you start panicking, I had someone that I marked said, hey, I think I had a panic attack. You don't need. How do you pull yourself out of that? You need to be dealing with those things. Because remember, not everything will be as easy as straight line diminishing. There's that thing that might cause a little bit of discomfort.
My question is the depreciation on plant and equipment.
Which one?
The depreciation for the plant and machinery, sorry. Plant and machinery.
In the assignment?
Yes.
What happened then?
Oh, I was struggling. Because I know that we must calculate the depreciation of the old plant of the new one, and I'm not sure if we had to add the depreciation of the one that was used for constructing the building.
Interesting. Park that after Lizzie, I will take the answer to get people to assist you on that one, to say how we deal with that. Zex, I see you struggle with 25 years. let's start with that one. If it's 25 years, let's go back to our example of 100,000. So now if you are given in years, anyone else, what do we do?
If you give it in years, then you divide it by the years. So if they say it's 100,000 over 5 years, then you divide it by, take 100,000 divided by 5 years, which give you the depreciation for the year.
6, did you get that if it's years? You will type there on the group. So the principle should not change. So if it's a percentage, you multiply. In that case, we'll have taken that 100,000, divide by 25 years. I think you said 25 years in your case. So you need to know what to do. That should be your next step. So they can give you all the years they want. They must not try to confuse you. It's the same principle. Back to the question here, Maki. Please assist Maki.
There's another way to do it. You can take the 100% divided by the years and you'll get the percentage if you feel comfortable with working with percentages as well. So you can take 100 divided by 25 and that will give you the 4%. And it times it by the cost price.
Oh, that's a question to Zags.
What was Zake's question?
The first one.
Sorry.
No, it's all right. Yeah, it was on that one when you're dealing with the years.
Yeah, there's two ways of doing it. You can take the cost price and divide by the years, and it's important when it was purchased. So the months come into play. So you have to divide by the number of months over 12 in order to get the exact depreciation for the remaining of the year if it was bought during the course of the year and not at the beginning.
Okay, thanks for that. Let's get Maki. Start again that question. Let's listen carefully to Maki, and then we'll be able to answer her.
My question is basically how do we calculate the depreciation for the year for plant and machinery?
Is it a question that was coming from an assignment, isn't it?
Yes.
What was happening? What was the story there? Do you want to elaborate further?
The confusing thing is that they bought machinery. They also there was also machinery that was withdrawn. Other plant and machinery was used for construction.
That's all right. So your thinking is like, how do we deal with all this mess there?
Yes.
Please, team assist. How do we unbundle this mess? I should be seeing the hand. You guys submitted the assignment. The friend is really struggling. If you got 100% 90, you need to assist us here in an assignment. I'm picking you up on you guys intentionally.
Sorry, who got 100%?
No name dropping. They know themselves. But anyone who attempted the assignment, please let's get to the crux of this. It's a serious problem.
Okay, I can help.
Let's get someone else back for a little bit, John.
Okay, no problem.
Okay, may I ask it? May I ask it here? You simply calculate the depreciation capitalized. You take the percentage times number of months that was given on depreciation capitalized, of which is 3 over 12 from August, September, October, and from August, it was 3 months. So that 3 months, 3 over 12, and then you take the amount of which it was 500,000. The amount of equipment that was capitalized, and then you calculate it, and then you get the depreciation capitalized. So for that 3 months, and then you take the same amount of 500,000 for the equipment that was capitalized because it was not sold, and then you multiply by 25%, and 25% times 9/12.
Usually, I'm an accountant, I'm even more lost. Can I get someone to start first? Explain what is this depreciation capitalized in simple English. I think that's me and Maggie, we are lost. What is this depreciation capitalized? Tell us the depreciation and the mechanism that I must follow to understand easily before I get to this confusion on calculations.
Okay. What is capitalization of a non-current asset? Is when a non-current asset is withdrawn from normal operations and utilized to add value in the creation of another non-current asset. Okay. So, which means that there was no economic benefit in its current form where it was. So that is why you have to take the depreciation, calculate it at the percentage times a number of months, and apply it as a cost factor because it's creating value elsewhere. And a typical example would be in buildings, and I see this, or it might be in the construction of another plant. So that is why you have to take that depreciation element and show it as a addition to the other non-current asset where it's being utilized. Okay, now that we have the concept.
Did you get the concept right, Mikey? What was happening?
Yes, sir.
All right. Did everyone follow? That is a perfect explanation of the concept. You've got this asset that is of no very good use to you. All that you decide because maybe you don't even have a market to sell it. It might just happen anytime. So you might have that asset from previous year. You might use it maybe for the first 3 or 4 months. Don't miss that part. So it will carry on being depreciated up until the date of withdrawal. Remember the theory I was giving to say when do we start doing that? So it's more like you're treating it as an asset disposal, but it's not necessarily an asset disposal. Carry on, Joan, thanks.
Okay, so what you do in this case, they tell you that it's the cost, okay? And we know in this particular example, they gave us the carrying amount at the beginning of the year. So they didn't give us any other information. So we take that value as is, that $500,000, and we times it by 25%. And I think it was utilized for 3 months, right? Because it's from the date of withdrawal. Times 3 months, we get 31,250, and that is an easy one, which means that you can just take it and apply it to.
Please type that on the chat, that amount, to get to that amount quickly so that you can see it. Those that maybe are not getting that, if you don't mind, thanks.
Sure, no problem.
Let us explain what that is. Then you move us to the next step, because it's a step-by-step process, which is what was giving Maki that discomfort. What is that 31,250?
That's the capitalized portion of the depreciation.
Explain in English, what does that mean, or how should we treat that in simplified term?
Okay. Basically, that is the portion that you're going to add as cost to the building. And the rest is easy because the other elements of the additions are given in terms of labor and material. So then you add that to the 31,250 to labor and material, and and you get to your additions of 1,306,250. So that's done, and that's a calculation, and you cross-reference it to your calc on your additions to your buildings.
Did you dump that in the chat as well?
Yeah.
The calculation?
Yeah, do that.
Maki, are you happy?
Yes and no, sir, because the depreciation method is the reducing balance method. So I don't know if we should
Let's pack it there. Remember, we're eating this smart. We've just dealt with the diminishing balance method and everyone was happy.
Yes.
In this case, you are replacing that 100,000 we've been dealing with the new cost. Then what is difficult? And then you're going to bring that element of the timing difference to say from when up until year end. It's the same thing as we're doing now, but now you don't have that 100,000. So in a first year, the diminishing balance method, even in this case, will be the same as the straight line. It's going to be like year one. So you've got the cost, now it's no longer 100,000. You multiply by the rate, and then you do the timing apportionment.
Okay. My problem is that the equipment was bought in, the machinery, sorry, was bought in 1 July 2017. So why are we calculating the depreciation?
No, let's not mix. We're talking about the capitalization issue first, isn't it?
Yes, yes.
Okay, carry on.
No, I want to ask if why are we saying 500,000 times the 25% and the period of the capitalization? Why are we not saying 500,000 minus the accumulated depreciation of that plant and machinery?
Why
Because
you want to minus?
The question is silent, so they didn't give you additional information to tell you whether it's carrying amount, but they do give you the carrying amount at the beginning of the year. So you just take what they've given you as 500,000 because that's what they say that you got to base the calculation on.
Let's go back quickly. Remember that 100, Peter Focus, that 100 minus 20,000, the 80,000 is carrying amount. Hence, I was forcing you guys to get the totals there. That you need to know, it is carrying amount. I think I asked Cedric to write that. First is cost, and then you minusing the depreciation, it gives you carrying amount. But now once you've given the carrying amount, or you do have a carrying amount, it means your life is easy to deal with diminishing balance method. So you don't have to do the 100 minus the previous year's depreciation. It's already been done for you. All that you do, you plug the multiplication. So it's important for full understanding to say, what is this? So if you've got an amount, like in that case, I think Shirley wanted to take 64 and multiply for year 3, which is not wrong, but you need to understand what is it that you are doing when you're doing that. Land at cost 1 million, we need now to go to note 1. And then you've got factory and office, it's got note 1 and note 2, no information. Machinery and equipment, it's note 3. Motor vehicle, it's note 4. So remember, I've covered the note 5 and 6 where they're telling me about the rate. As I was explaining earlier on, you will have gone from the last two. You need to always read the last two kind of additional information to get more details about what is happening before you move on with your life. There is that information to assist you in answering the question one more time. So you've got additional information 1, 2, 3, and 4. The rest are writing. Remember, you've got 36 minutes. You just need only to hear me because you're practicing and you're going to submit to get that. So here, exam technique and number 5, you need to quickly take those rates. MV for motor vehicle equal to 20 straight line. Factory and office 2%. Machinery 20% reducing balance method. Machinery and equipment. How is it going?
Sorry, can we get those rates of depreciation once again?
Okay. Which one are you looking for?
I know motor vehicle is 20% on straight line.
Factory and office building 2% straight line. Machinery and equipment is 20%, reducing balance method.
Okay, great stuff. Thank you.
Number 1.